Hello, and welcome to Explain the Charts, your premier destination for detailed market breakdowns. Today is March 25th, 2026, and Bitcoin is currently at the center of a massive tug-of-war between institutional adoption and geopolitical fear. The news cycle is dominated by BlackRock CEO Larry Fink's prediction of a surging crypto market over the next 5 years. Meanwhile, Bernstein analysts have set a bold $150,000 price target for BTCUSD by the end of this year. This optimism is clashing with the reality of the Federal Reserve holding interest rates steady at 3.50% to 3.75%. Furthermore, the market is reacting to President Donald Trump's 5-day pause on strikes against Iran, which triggered a significant relief rally. However, if the Strait of Hormuz crisis escalates, oil prices near $113 could continue to pressure risk assets like Bitcoin. On-chain data is currently flashing a warning sign with a $4 billion liquidation zone sitting right at the $69,000 level. Traders are also closely watching the Clarity Act, as legislative delays in the U.S. could introduce a surprise price shock. Despite these pressures, MicroStrategy continues its aggressive accumulation, reload purchasing $44 billion worth of Bitcoin. We are seeing a regime shift where Bitcoin is beginning to decouple from gold, showing resilience during macro uncertainty. Even with the current volatility, institutional flows into spot ETFs saw a net $167 million inflow on March 23rd alone. This suggests that the smart money is viewing these price dips as deep value opportunities. As we move into the charts, keep these fundamental drivers in mind as they explain the erratic wicks we are seeing. Let's dive into the data to see where the price is likely headed next. Taking a look at the daily chart, we can see the broader context of Bitcoin's journey over the last year and a half. Bitcoin is currently trading roughly 40% below its all-time high of $126,080 reached in October 2025. After that peak, we saw a long corrective phase that eventually found a firm floor near the $60,000 support level in February 2026. This $60,000 level is crucial because it represents the 2023 investor cost basis, which has historically acted as a major pivot point. Since hitting those lows, Bitcoin has extended a sharp rebound of nearly 25%, lifting the asset back above $70,000. Looking at the candles from late January through March, you can see a series of higher lows forming. The daily candle for March 2nd saw a massive 9.58% move, signaling a strong return of bullish conviction. However, the rejection at the $76,000 resistance level was equally sharp, leading to the current consolidation range. If we can hold the $70,000 mark on a closing basis, the technical structure remains bullish for a retest of $80,000. Conversely, a break below $67,000 would likely signal a deeper retracement toward the $54,000 historical support zone. The volume has been hitting multi-year lows, which often precedes a major explosive move in either direction. Note the long lower wicks on several candles this month, indicating that buyers are stepping in aggressively during dips. The daily VWAP is currently hovering near the current price, showing we are at a fair value equilibrium point. This sideways movement reflects the market's wait-and-see approach regarding the Fed's next speech. The overall trend is neutral to bullish, but we need a breakout above $76,000 to confirm the next leg up. Switching over to the 1-hour chart, the impact of the recent geopolitical news becomes very clear. On March 23rd, we saw Bitcoin rocket from $67,500 to $71,200 in a single session. This move was a direct reaction to the pause in Iran strikes, which allowed leveraged traders to push the price higher. However, the rally stalled near $71,500, leading to a wild roller coaster ride that left many traders liquidated. You can see the volatility between March 23rd and March 24th, where price swung back and forth across the $70,000 level. The hourly chart shows a series of rejections at the $71,400 level, which has now become immediate resistance. On the support side, the $68,800 to $69,200 range is acting as a very strong magnet for price action. This correlates with the $4 billion liquidation zone mentioned in the news, where stop losses are likely clustered. If Bitcoin fails to hold $70,000, we could see a rapid cascade down to the $67,500 support level. The hourly VWAP is sloping slightly upward, suggesting that intraday momentum is trying to shift back to the bulls. We should also monitor the crude oil price correlation, which currently stands at a dangerous 0.68 positive correlation. Any spike in oil prices due to renewed tensions will likely see an immediate sell-off on this hourly time frame. Notice the decrease in transaction counts during the consolidation phases on the 24th. This lack of participation often means the market is waiting for a catalyst, like a Jerome Powell speech or a ceasefire update. Keep a close eye on the $71,400 breakout point for a potential long entry. Drilling down further into the 15-minute chart, we see the micro movements of the last 24 hours. Bitcoin has been stuck in a very tight range between $70,200 and $70,800 for the majority of the day. There was a brief attempt to break $71,000 earlier on March 24th, but it was met with immediate selling pressure. This tight consolidation suggests that a breakout is imminent, as the Bollinger Bands would be contracting significantly here. The VWAP on this time frame is being respected as a dynamic resistance level, keeping the price capped for now. Short-term traders should look for a 15-minute candle close above $70,800 to signal a move towards $71,500. If we lose the $70,100 support, expect a quick dip to test the $69,500 liquidity pool. The transaction volume has been relatively consistent, showing that scalpers are active in this range. We can see a small head and shoulders pattern possibly forming, but it remains unconfirmed until the neckline at $70,200 breaks. The news about Israeli TV reports of a one-month ceasefire could be the spark that breaks this range to the upside. Watch for any sudden increases in transaction counts as a leading indicator of the direction of the break. Bitcoin is showing a regime shift where it is holding better than most altcoins in this tight range. The short-term trend is neutral, perfectly reflecting the uncertainty of the current macro climate. Avoid over-leveraging in this zone, as a move toward the $69,000 liquidation magnet could happen very fast. Wait for clear confirmation before entering new intraday positions. To recap the key levels, $72,000 and $76,000 are the primary resistance hurdles for the bulls. On the downside, $69,000 is the critical support, followed by the major floor at $60,000. My unbiased prediction is that Bitcoin has a 70% chance of staying above $67,000 if the geopolitical situation remains paused. A move to $80,000 has a 25% probability in the short term, contingent on a successful ceasefire announcement. There is a 40% chance of a quick stop run down to $69,000 to clear out high-leverage long positions before any further upside. In the long term, the institutional accumulation from firms like Strategy and BlackRock provides a very high likelihood of retesting $100,000 by year-end. However, high inflation and rising treasury yields remain the black swan risks that could push us toward $46,000. Look for the passage of the Clarity Act as a major bullish catalyst that could resolve much of the current uncertainty. Keep an eye on oil prices, as they are currently acting as a leading indicator for Bitcoin's risk-off moves. Stay disciplined with your risk management, and don't let the short-term noise distract you from the long-term trend. Bitcoin continues to prove itself as a unique asset class that can decouple from traditional safe havens. Thank you for watching this deep dive on Explain the Charts. We will continue to monitor these levels and provide updates as the price action unfolds. Please remember that this video is for educational purposes only and does not constitute financial advice. Always conduct your own thorough research before making any investment decisions in the volatile cryptocurrency market.